Yo, what's going on, guys? I'm gonna be doing another video, like an educational video. I'm not gonna be doing a recap video for today, um, but I did have really good trades in my Discord today, so maybe I'll do this in the future. But I should have trades every day. So if I don't do a trade recap every day, that doesn't mean I had a lot of losses. That just means I want to do something else and switch it up a little bit. But I had another good day in Discord yet today. I called a 20-point move off open, so that was nice. But yeah, so in this video, what I'm going to do is I'm going to kind of show you guys something that has to do with liquidity in the model. So as you guys know, I follow a certain type of model, which let me pull it up real quick. Give me 2 seconds. And this is the model that I did post on my Twitter, okay? And I posted 3 different models, but for the sake of this video, I'll literally just go over probably just one, I guess. So I guess for now, I'll just go over this one. Actually, here, let me pull it up on my Discord. So I'm going to pull this up on my Discord real quick. Sorry. Trying to go as quick as possible. So if you guys are in my Discord, it's in the education section right here. And the model that I basically base my trades off of is this. So if we open the original one of this, close this. So I base my trades off of this, okay? And hopefully you guys are all familiar with this. If you're not, just read this real quick, pause the video, read this. And so I want you guys to realize something. After we have a market structure shift and we hit our fair value gap, where does price needs to go? To complete the model, price must hit sell side or price must hit buy side. So if we're in the bullish model, it must hit buy side. If we're in the bearish model, it must hit sell side. So knowing that, I'm going to show you guys something. So if you're ever looking to get in setups, okay, maybe on the 5-minute or 15-minute, what I do is I always check like the 4-hour, or I'll check other time frames to see if we're in a bigger setup in itself. And why do I do this? So I do this because on the smaller time frame, we can go with the momentum that with the higher time frame. On the higher time frame, if we know a certain liquidity has not been hit yet out of a certain model, then in the lower time frame, we can look for setups that go towards that liquidity. So I'll give you an example real quick. So right here, we have a fair value gap bounce, okay? And we got up to about there, and I was like, well, we bounced off this fair value gap, next target's up there. But let me see if I can find where I said this in my Discord. I might load it in my other channel. And this was yesterday. Let's see where I said it. Okay, so at 1:24 p.m., okay, right here I said next target, buy side liquidity. Why did I think that? Because we bounced out the 4-hour fair value gap, but to complete the setup, we need to hit liquidity, okay? And in this situation, this is kind of a weird situation because we never actually bounced off discount. It was actually a premium, which was surprising, which makes me think we're going down more to hit discount. But we'll see what happens. So I knew we had to hit buy side liquidity, okay? So we were right here. We had not hit buy side liquidity yet, and that was my next target. I had a really strong feeling we're going to hit buy side liquidity. So what happens now? So now that on the higher time frame, I know we still haven't completed the model, right? I know when I go in a shorter time frame to look for short setup or long setups only. And you can see after we bounce out of this fair value gap, we went up to about right here, and we were at right here, and I said my next target is buy side liquidity, okay? So that means you're supposed to find either a break of structure and fair value gap retrace to enter, or you could enter on like a EMA bounce or support whatever strategy you use, okay? And now that I know that the model's supposed to complete, all I have to do is look for a good entry on the way up. So some possible good entries could have been right here, which we never got to, okay? Could have been right here, fair value gap. You can enter it here. We have an order block right here, which you could have entered, okay? And the entry that I ended up alerting was alert, logging this if we close on the 3 minute, targeting the black line. By the black line, I meant the dotted line. I just wrote black, but people understand that. So I said I was going to long that if we close over the 3 minute. And I already had a strong feeling we were going to close over and push to that dotted line, but I didn't say that because I think it's, in that situation, rather than chasing and entering the fair value gap, it's better to enter like for confirmation. So I had this trend line drawn at the time, and this is a good trend line to take. Why? Because we still have buy side liquidity above, and again, you want to make sure you're taking downtrend breaks before hitting buy side, and you want to make sure you're taking uptrend breaks before you hit sell side. If you take a downtrend break after you hit buy side, it likely won't work that well. So what happens? We end up closing over this in the 3 minute. We get a retest. My stop loss was if we ever closed back under it, but we never did. And as you can see, we made a nice move up to 3809. So the entry was 3793 on the scan close. And you had a max drawdown of 5 points, which isn't much for a almost 20-point move. So if you know where we are in a higher time frame setup, and you know we still haven't completed the higher time frame setup, then yes, you can look at the shorter time frame and know that we're probably going to hit the higher time frame liquidity, and the model isn't complete yet, because remember, these models have to complete, okay? They're going to hit sell side or buy side, and then you can go to smaller time frame and just play whatever way the momentum is to wherever you know liquidity is. So let me give you another example real quick. So maybe I'll look for one for today. So today was kind of a weird day. We had a lot of consolidation in the middle of the day. So I guess one setup today could have been see, I'm on the 15 minute. I don't really need to look for like a setup that ended up playing out. Can't really describe this. So let me try a 30 minute real quick. Okay, let's use we can just use this as an example. So in this situation, this looks like kind of a sell model, okay? If you guys aren't familiar with the sell model, it's basically just like consolidation phases up, boom, smart money reversal, retracement, and then we hit liquidity, okay? And in the sell model, you have to end up hitting liquidity down here, okay? So if this was truly the sell model, we have to hit liquidity down here. And what happens? We raise up here. We technically get our first market structure shift right here, but to confirm that market structure shift, we also get a break of structure right here. So we get a market structure shift, and then we get a break of structure right here. We break below this last high or this last low, and again, boom, we create a fair value gap on the 30 minute. And oh, this is the Thursday. Okay, so this was back at Thursday. Wow. So we create a fair value gap right here. What happens after we have a break of structure and we create a fair value gap? Well, we have to hit liquidity. So in this example, knowing, like if we were right here, if we were retracing down right here and we still haven't hit liquidity for this 30 minute, you could look for entries right there. And if I go in like the 3 minute maybe and go to Thursday, let's see if I can find a good example. So right here, on the 30 minute, you know that we haven't hit liquidity yet, and let's say we're up here. So that's when you go to the smaller time frame and be like, oh, well, we're in the middle of a 30 minute setup right now that still hasn't hit liquidity. So you know where the draw on price is. So you know we're going down there. And that's when you can use the smaller time frame to your advantage to get an entry. So in this case, you could have entered in this fair value gap right here. This was a good entry. We get another fair value gap right here in the 3 minute, and I'm sure these are in the 1 minute too. So knowing where the price is going to be drawn to, you could have entered any of these, and your target would have been the higher time frame setup. Yes, your short-term target would have been like the last recent swing low, so like right here, but ideally your target for the higher time frame is right there. So that's kind of when you would enter. So that's kind of something you want to know. And again, if we go back to the 30 minute, and we go back to that date right here, if this truly is a sell model, right, then you know that we have to hit right here, because that's how the sell model completes. So on the bigger time frame, the next day we retraced down here, but you, in your head, you were like, oh, well, we still haven't hit the price target from the sell model. When are we going to hit it? And that's what, again, you'd go on the smaller time frames, and depending on where we are, you would kind of look for setups that go to this liquidity. So maybe right here, when we pumped up, you'd be like, oh, I'm looking for short setups. But on the smaller time frame, there's not going to be any structure shifts downwards. Okay, you're not going to get any structure shifts downwards of fair value gaps, because it's clearly pumping right now. And a lot of times there's setups within setups. So even this kind of was a setup within setup, because if you enter in this fair value gap, your stop loss would have been below this order block or whatever. And even this was technically set up because we had a fair value gap, and then boom, we need to hit liquidity right here. But in the back of your mind, you're like, oh, we're still in a 30-minute higher time frame setup. We still have not hit liquidity down here. And in your mind, you're looking to go short. So some other things you could do is you could start drawing like the fib to see if we're in discount or premium. And as you can see, we wick right above in the premium and then retrace. So these are just some things to keep in mind, especially if we're in like a very, very high confident, a higher time frame setup. Then go to the lower time frame, but just scalp towards where you think where we have to complete the model. So like in this situation, we have to complete the model here. So what do? You go to the smaller time frame, and you scalp to where the drawn price is, and the drawn price would be right here. So that's kind of how you can get your entries on the smaller time frame and have your bias be correct. Again, you don't have to be on the 1 hour and based off just this, know where we're going. Just look at the higher time frames and see if we're in the middle of a setup. And right here, like, we're not really in the middle of a setup technically. I mean, yes, we did reject this 1 hour fair value gap, but was there a market structure shift? No. But maybe if you are bearish, you're expecting price to go down here. But again, we don't know that for sure. There's not really any setup right here you're playing out. But let's say there was a market structure shift, and then boom, we went in this fair value gap. Then you know we have to hit down here. So what do? You go to the smaller time frame, and you look for a bunch of smaller short time frame setups that go along with your bias. So yeah, a lot of times what you're going to see is even in the 1 minute, there's going to be setups within setups within setups, okay? And as long as you know where the higher time frame drawn price is from a model playing out in the higher time frame, you're going to be pretty good at the smaller time frames, because you're going to know exactly where price wants to go. Where does price want to go? It wants to complete the model that I showed you in my Discord, okay? So it wants to complete this model, and it wants to go to sell side or buy side liquidity based off of where the model is. So, and something else I just want to show you, if you go to the 1 minute, okay, look at this. Okay, look at this right here. So this is the fair value gap, right? And obviously we gotta barely retrace into this. But this setup where we get these fair value gaps, as soon as we get this fair value gap, where's the target? The target's right here, buy side liquidity, okay? So this is the target in the 1 minute time frame. Same exact thing goes, if this setup were in the 1 hour, the target would still be up here, okay? So no matter what, wherever we bounce to the fair value gap, we always have to hit liquidity, which is at the swing high or swing low that was made before hitting the fair value gap. So on the 30 minute, again, in the 30 minute, this would be the target. In the 1 minute, this would be the target. In any time frame, this would be the target. So whatever time frame you know we still haven't hit the target on, like let's say the 1 minute. So if we're right here and we haven't hit this target, well then yeah, you could go in the 15 second and look for bullish setups in the 15 second. Same thing goes with like the 30 minute and maybe the 1 minute. Maybe the drawn price for the 30 minute is right here. Let's say we're in the middle of a model in the 30 minute and we still haven't hit the target yet. Then you could look for long setups here. So it kind of goes hand in hand. So yeah, that's all I got for today. Let me know if you have any questions. Make sure to comment or ask in my Discord. Ask me in my Discord. Hopefully this helped you guys. Rather than kind of guessing a bias, like I could go on the daily right now and be like, oh, I think we're gonna go and hit this buy side liquidity, but obviously there's not really a model right now playing out that kind of shows that. So obviously you can kind of guess and maybe do that, but the better thing would be go in the daily, go in the 1 hour, go in the 4 hour, see if a model's in the middle playing out, and if it is, make sure that we have not hit the price target. And if you know that we haven't hit the price target yet, go to the smaller time frame and just play the setups that are going to lead more to that price target on the higher time frame. Because again, no matter what setup you take, they're always going to have to hit sell side or buy side 99% of the time. So just play the draw on price as you see in the higher time frame and the lower time frame as well. So hopefully this helped you guys. Let me know if you have any questions. My Discord, as I already said. But yeah, other than that, I hope you guys enjoyed, and peace out.